quite a vigorous process towards the adaptation of the IFRS 9. And I must also say that it provides quite some assurance as to how much time has been spent to analyze the tool that was prior used to the adaptation of the IFRS 9. But at the same time, I must admit that change is something that everyone is usually nervous about, especially when it comes to adapting things that were previously not being used, previously not tested. It's definitely something that many institutions take as a risk, and the kinds of things that are considered, it can go wrong, it can go right. If it goes wrong, what happens to us? People would, in many cases, rather get stuck using what they're familiar with as opposed to embracing something that is new and that is very common even in day-to-day life. When it comes to the tool that we have spoken about, I would like to know, now that more people, more institutions are getting to use it, I want to know, what is the impact of the tool so far and what should we expect for the future? I think this would be a great opportunity for those who are in doubt to be able to actually trust and believe that there is, a lot of good installed for them with the IFRS 9 tool.
Practitioners, accountant, was perceiving this standard as a punitive standard, too complicated standard, based with the requirement now to quantify the future and make provision today. It is something not easy. So some entities tried to dodge from effectively adopting it, but the auditors normally ensure and enforce all companies using IFRS, they adapt the standard. Because I agree with you, we had IAS 39 since 2005. So people have been using it since then. Then effective from 1st January 2018, they are now told to migrate from IAS 39 now to go to IFRS 9. So we know whenever there is a change, there will be a group of people who will choose to resist to change. But unfortunately for this IFRS, normal accountants do not have an option. Once they are effective, it is a must. For those who wish to prepare a compliant financial report, they have to adopt the standard. So effectively from January 2018, most of the entities started to adopt IFRS 9. But the challenge was now how they ensure they implement and they ensure full compliance with the standard. There is where we faced the gap in terms of implementation, because to implement the standard, it means accountants have to be trained with the new requirement of the standard for them to understand. Also, for example, for financial institution with a significant credit portion, especially for banks and financial and microfinance entities, insurance entities, they are supposed to develop a model or a tool which will be able to quantify the future and give them information today of how much they should provide for. So that also was also a costful project if you didn't budget for it. So there are a lot of challenges, but normally encourage accountants to be proactive. There are also other entities which were proactive enough that they performed a gap analysis before the standard was effective. So for example, there are some entities which performed the gap analysis around 2017, a year before IFRS 9 became effective, and see what will be the impact of the standard. So for those, the adoption was quite smooth, but for those who were reactive, they waited for it to be effective to start implementing it. It was quite difficult. And so far, we can say we have about 3 good years since IFRS 9 was effective. So compliance have somehow improved compared to 2018, where most of the entities were trying to use IAS 39, but on the nomenclature of IFRS 9. They're saying you are adopting IFRS 9, but if you go to the way they account for their instrument, you'll find they are still using guidance of IAS 39. But for now, we see most of the entities have adopted. And they perceive the impact of this standard because now it requires entities to make provision for expected credit loss immediately after investing in financial instruments. So the major impact was expected that now there will be a lot of provision, or the provision balance in the financial statement will be significant compared to previous accounting standards. But what I can say from my experience, yes, for some entities, yes, they experienced that, but for others, they didn't experience that impact. Because for those, especially those who did gap analysis, they foresee that when this standard become effective, especially for banks and microfinance institutions, they foresee before 2018 that if this standard become effective, there will be a lot of provision to be made, and this provision has to be recorded in the statement of the financial performance. We call a statement of profit or also other comprehensive income. So to be presented as the expense. So this is going to reduce your profitability. So because people are interested with their bottom line, the profit position, so they did some initiative to ensure this standard, once it become effective, the impact, it won't be massive on their bottom line. So for example, for bank, they opted to clean their loan book before the standard become effective. So they initiated the process of lighting of those non-performing loans to ensure once the standard become effective, they only do provision for performing loan. So you can see for some major banks, they experienced a decrease in the provision in 2018 with IFRS 9 in place. Same to 2019, but in 2020, we start to see now the provision is going up. So now the bank and financial institutions are hit with IFRS 9 impact now. You can see the provisions going up. Even the ratio of non-performing loan somehow went up. Yeah, for some bank, not all. If you go to industry level, you cannot tell for now if it is just the IFRS 9 alone or it is also backed up with COVID-19 impacts, because now some customers require a payment holiday, others default to pay their loans because they've been hit with COVID-19 and they don't have a good environment for performing their businesses. So you find they don't even pay, and the bank struggles. So it is now quite difficult in 2020 to rank if the increase in the provision is just because of IFRS 9 itself or COVID-19 has something to do with it. But you can agree with me now, even the COVID-19 thing now, with IFRS 9, there is a room to accommodate it. In the previous standard, we could have ended up caught napping that now the bank books significant value of provision, a lot of loans undergo non-performance, and the bank have to write off, and this is something that the bank don't expect to be doing, because writing off a loan, it means you accept the loss. It's going to deteriorate your capital. So for any bank, when they give a loan, they expect the customer is going to be performing, and they're going to recover all this amount to be able to disperse to other customers. So with IFRS 9 booking provisions now have reduced the capital for bank. And even the central bank, after assessing the impact of this, came out with policies which will ensure will stabilize the capital for bank to ensure they are always in compliance so that they can remain in business. But the major impacts for financial institution is the increase in the expected credit losses. Because before they have to wait until loss event occur, they do provision. But with IFRS 9, they do provision immediately after giving out the loans. So it means you're booking more provisions even for those performing customers. So this was not received well for bank, because they were seen to be having more expense and they're less profitable. Something they don't prefer the public to have that picture. Yeah. So that was a major impacts. But going forward now, on what we should expect, we expect now from 2020 onward, now we are going to see the true color or true impact of IFRS 9, because I said before, those who did gap analysis, they light off all non-performing. So they are making provision in performing loans. But as you move forward now, as those even performing customers now, some become bad customers, they don't pay. So those loans now migrate from performing stage to non-performing category. So now we'll be able to see the true impact of IFRS 9, especially from 2020 to 2022. We'll see the impact. So we see that I expect there'll be more provision from bank. Otherwise, if the bank now try to be vigilant enough to do customer monitoring, a very close customer monitoring, to ensure customers are paying on time, but also for those who are normally involved in customer vetting before they give out loan. So they should ensure they do proper analysis to ensure they give loan to a qualifying customer, to avoid the risk of adverse selection, give out loan for a customer who tomorrow is going to default and make you suffer the loss. So they have to ensure they monitor well true risk, the risk of adverse selection, ensuring that credit team find the proper customers, internal auditors, they perform review of the customer file before the bank make a decision to disperse the loan. But also internal auditors should also ensure they have robust policies and procedure for reviewing customer creditworthiness for banks to ensure they give a loan to proper customers. But the issue of moral hazard now, because you can assess and find the customer is qualifying to be provided with a loan, but going forward, because of one reason, customer might default. Now we call this a moral hazard, because there are some customers who default because they just chose to default, and there are some customers who default because they experience economic hurdles in their businesses, so they are going also to default. So they should ensure that there is a proper mechanism to monitor the customer and be able to capture information which will make them default in the future, to be accommodated in their model for establishing expected credit loss, so that even in the future we won't be shocked with a significant increase in the expected credit loss, especially for banks and the financial institutions.
Well, speaking of the issue of compliance, which you have mentioned several times when doing your presentation, you have mentioned that there was an issue of compliance in terms of people and institutions having their doubts and holding back from adapting the IFRS 9 tool. I would like to know, because there's a saying which says no one is safe until everyone is safe. And in this situation, we have seen the benefits, the countless benefits of IFRS 9. So what are we going to do to ensure total compliance? Because that is a stage that we haven't been able to achieve yet. Is there legal consequences towards those that are reluctant to jump on the bandwagon when it comes to the adaptation of the new tool?
As I can say that most of the entities now have adopted IFRS 9, but the issue of now tell if we do full compliance with the standard, it has something to do beyond the practitioners or accountants themselves. Because for those who opt not to adopt it, normally auditors, they are going to qualify their financial. They are going to say that they are not in compliance with the International Financial Reporting Standard, of which is not a good message to readers of financial statement, neither to investors or board of directors. So they are going to ensure they comply. But maybe the question could be, do you have a conducive compliance environment for practitioners, these accountants, now to fully adopt IFRS 9? And on this, I can say we are heading to the green light, but we are not yet there, because to comply with IFRS 9, you, apart from the issue of classification and measurement, because the major issue here is how you make provision. How do you make expected credit loss? which require you to have a lot of information regarding the future. So the issue will be, do we have already available data for accountant to use to quantify the expected credit losses? And for this one, I can say we are not yet there, honestly. So there is a law, for example, there is a law for a central bank to ensure, for example, those economic variable data is historical in the forecast are already available. For example, if you want to know today what will be the exchange rate 5 years to come, such information have to be in place, because for you to be able to do provision, you need information about the future for at least 5 years. I can say for at least 5 years. So you need information about all variables, information of inflation rate, information about the exchange rate, information about the GDP growth rate, information about the balance of payment, information about unemployment level, information about sector performance. We need to have them historical data, but also the future data. So this should be the call for central bank, as well as to National Bureau of Statistics, to ensure this data are available. Because we see, with my little experience, most of clients, they go take those data abroad. We have platforms outside Tanzania which provide data which explain our economy. But it could be better if this information could be obtained internally. For example, World Bank, they do publish forecasts of our variables, for example, exchange rate, interbank lending rate, unemployment, GDP rate. World Bank do publication for that. International Monetary Fund, IMF, do that. We have a platform of those rating agents like Moody, Standard & Poor, Fitch, they do. But I see it could be better if we could be obtain this data internally. Because if you go abroad, now there is the issue of comparability. But if one entity have used data from the World Bank, another one have used data from Standard & Poor, another one I said have taken data from maybe trade economist websites. So the comparability I bit questioning toward the practitioners, because you will find one website they say that our future exchange rates will go up by 2%, for example, but one website say by 1%, and World Bank think maybe it remains stable. So these three datas are not speaking the same language. So these people will be doing a provision, but it will be too hard to say this one have been heated more, or they're not doing well because they have higher provision than the other, because the data are coming from different sources. So if you can ensure all data are coming from the same source, so it is maybe it's a call even for the banks to ensure they use well the association. In Tanzania, they have association for bankers. So maybe they should use the association to advise authorities responsible for publishing these data and doing the research to be able to make the information available so that they can use. But also they should also encourage for accountants now to undertake trainings to ensure they've been trained enough to be aware with the requirement of IFRS 9, so as to ensure they improve from where they are toward the full compliance. But for now, I can say we are complying, but we don't have a full compliance because of those challenge issue of data availability, issue about the knowledge gap for those preparing the data, issue about even the readiness to learn and ensure they complete the challenge. Other they say the issue of costs, because if you want to buy a tool which will be able now to help you to do quantification of the future and give you the estimate of the expected credit loss to book, even those tools were too expensive. So in the past, I don't know about today, but you know, current price will be already went down because most of the entities already have the tool. So it will be the issue of modifying the tool. Okay, but the other issue I see in our compliance, we had a perception for those who acquired the tool for doing provisioning in early years, maybe in 2018, 2017, 2019. They had that perception that once you have the tool, then you have it all for full compliance. This standard, as I said, it is a principle based. It just gives principles on how you should do provisioning. And it is not a static standard. It undergo a lot of changes. For example, in 2019, we had the amendment to IFRS 9 to cover issue of negative prepayment if you give out the loan to customer. Maybe you give out 5 years loan to customer. You expect the customer to be paying interest and the principal for 5 years. Within the intervening period, the customer choose to prepay the loan and they want to get a new loan or don't want to part with the loan with your entity. Okay, so you may choose to prepay the remaining balance before the maturity date of the loan. So find if you have that issue, it will not accommodated in the model. So the model have to be adjusted to see how it can address the issue of prepayment of customers, especially on the amortization or standing balance. The issue relating to outbreak of COVID-19, some customers come to request for payment holiday. Maybe please let us not pay for these 6 months because we are still evaluating the impact of COVID-19 and we are not having enough cash to cover our operation and also to pay the loan. So they may request for payment holiday. So once that has been requested and the bank allows the customer not to pay, such factor also has not been captured on the previous model. So they have to be modified or improved. But also other factor like we had forecast way back in 2019, for instance, on how the economy is going to operate. For example, in Tanzania, we had a positive outlook of our economy. Yeah, with President Magufuli was expecting the GDP was going to go up. There will be a lot of projects in transport sector. So even the contribution of transport and communication toward the national GDP is going to increase. But with COVID-19, some projects have to be postponed. So these have affected indirectly our economy. So maybe our forecast of how the economy is going to be in the future has also been impacted with COVID-19. So you have to foresee with COVID-19 in place how the economy is going to behave in the future. So they have to remove those forecasted information, which we are already included in the model, to put those which reflect COVID-19 impacts. So you see, to ensure full compliance means this model have to be reviewed at least annually and ensure all assumptions made is really relevant compared to the current context of the economy. Yeah, so I can say there is a lot need to be done to ensure full compliance from practitioners, accountants, but as well as regulators and other information providers to ensure we have the conducive environment for practitioners to smoothly ensure full compliance to IFRS 9.
And when it comes to standardization and standards, different standards tend to work differently based on the location, based on the organization, and so on. And I would like to hear from you when it comes to this particular standard that we're really trying to push for so that different organizations adapt and use, because again, we have seen the benefits that come along with it. Do you feel like it's relevant based on our context? Because it's really important for us to have a visual of how relevant it is based on our environment and our context. Is it relevant?
Yes. It is relevant standard on the merit that now it try to give accountant a guideline on how they can quantify the future regarding the expected credit losses and book with them today. So to investors, they'll be informed that with the current outstanding balance we have, we are exposed to this much on the risk of default. So for investors, they'll be more proactive to ensure the default event is not materializing. If the provision is too high, they are going to lose significant balance. And if provision is too low now, they have to come with a procedure and mechanism to ensure they maintain that provision at that level. That is relevant. Even those challenges I said, that we could even say if we have this challenge of information in our economy, then why should we adapt it? In way back around November 2017, even our central bank, Bank of Tanzania, provided the implementation guidance for financial institutions, because the standard provided a room for management to make some assumptions, for management to choose what to implement or not. Yeah. So to ensure there is a consistency and uniformity for financial institutions, Bank of Tanzania released a circular which guide on how they should ensure the bank complete minimum on what variable. So that circular was giving guidance on how you make provision, on how you do classification, on what factor should you consider on forward-looking informations, and also requested the financial institutions, once they develop internal that tool, to ensure it is compliant, they should engage a third party, another auditing firm, which is not an auditor, to go and validate the tool and provide a separate opinion that the tool does comply with a Bank of Tanzania requirement, as well as the requirement of IFRS 9. So they did that to ensure we have a uniformity in terms of adopting this standard. But for other entities now, they have to go to IFRS 9 itself, because there is no other guidance provided for non-financial institutions. Maybe it could be the call also for National Board of Accountants and Auditors, NBA, also to consider the implementation challenges of this standard, and also to see if there is a guidance should be provided, especially on where should we take the information of the future, those forecasted variables. The model should be developed using which method. So there is a lot of method to be used to develop the model. And at minimum, what should be done to say you have complied with the standard? Because the standard is very broad, it has a lot of requirement, and we are not yet there to ensure full compliance. But you can see now, if the value of houses go down, our economy is not performing well, now the bank are booking more provision because of this standard. You see, because if you are using other standard, you had to wait until now businesses are closed, until customers suffer losses, close their businesses, or customer declare bankruptcy, now for us to be able to book provision as accountant. But the IFRS 9, we book immediately before, and we try to foresee what factor could make our customer default in the future. And from today, we quantify those factors and book provision. So become aware of how much are we going to suffer tomorrow? How much are we going to suffer a year after next year? How much are we going to suffer after 2 years? And we can be in a position now to make a decision if you are going to accept the loss, we are going to mitigate the loss, or we should avoid the loss. Yeah. So for example, for some entities they opt to take insurance cover against the future default, because they see with the IFRS 9 there will be a lot of provisions in the future. If the risk materialize, you're going to suffer the loss. So you choose to avoid the loss, you take insurance cover. You see, others choose to mitigate by doing a lot of monitoring, ensure they become close to customer, to ensure they don't default. So it is very relevant, and they see there is a value addition on it. But if you don't, if you implement the standard gives you the information, but you don't use such information for future decision, now you can see we will not see the value of the standard, because its role is to give us information which can guide our decision making. So I'm expecting, after having such information, after having provision, we should decide what we should do to avoid that loss which give us provision today from happening. Or if it is within our appetite, then we accept it. So it is very relevant, I say. Yes, and it is not a punitive standard, as a lot of people thought that it is complex, punitive, need us to be seen as loss-making, not profit-making. No. But instead, it's try to portray your internal practice in managing default, this standard. If you are not have a better practice managing your default, then this standard is going to hit you with more provisions, and you're going to be seen as loss-making before you incur the loss. But if you have a strong mechanism and policies to control future defaults, then this standard is not going to bring any significant impacts on your bottom line. Yes.
And with the implementation of the IFRS 9, as we have seen many continuing to adapt and the implementation continues, I'd like to know what services are you providing on the IFRS 9 implementation, especially for financial and non-financial institutions?
Yeah, we have a wide range of services as far as IFRS 9 compliance is concerned. For example, we do training. We have comprehensive training on IFRS 9 and other IFRS, but we have specific training for IFRS 9 for financial institutions because the major impact was, and is expected to financial institutions because they are the one with significant balances and investment in financial instrument compared to non-financial institution. So we have training for IFRS 9 implementation, where in our training we try to navigate through different models of our clients, and then we advise where they should make improvement. What has changed is if there is a pronouncement of amendment of the standard, then we preempt them at earliest what will be the impact of that amendment so that they can accommodate it in their model and become a proactive accountant than being a reactive accountant. But also we do service on model review and validation. If you have made improvement in the tool for computing provisions, then we can come there and review and tell you that if the amendment you have made or the tool you have developed is in compliance and conform with the requirement of Bank of Tanzania and the IFRS 9. But also we do model development. We have developed the model for various entities and you have experience for that. So if you don't have the model or if your model has been challenged on the compliance issues as far as Bank of Tanzania or the standard itself is concerned, then we can come to develop a new model for you or to improve the model to ensure the model comply with the requirement of both standard itself and the regulators, Bank of Tanzania and the National Board of Accounting Auditors. Normally, for NBAA, compliance is assured as once you comply with the standard. Yeah. So we do that, but also we do capacity building. If you want to build your capacity to ensure in the future you can modify your model by yourself, you can develop by yourself. So we do capacity building on how we should do that. So we have a vast experience because we started to do this standard immediately before it was effective and have been on the right end with the practitioners since when it was effective till now.
Those were quite some interesting insights from you, Mr. Leonard. I personally will leave to tell the tale because I feel like I have a better understanding. I feel like an accountant, even though I am just a journalist because of the details that you were able to share with us today. Yeah. And I am pretty sure whoever is listening has also been able to get enough information and insight towards the topic that we're covering today. And has also gotten to know a little bit more about Auditax International in case they had not heard about it before or didn't know what was being done by Auditax International. So thank you very much for joining me today. And I am Deborah Luila for today's session, and I welcome you to look forward to another session another day. Thank you.